If you've got this much credit card debt, you'll end up paying this much more in interest. But what if I told you there was a simple way you could do it by paying only this much and getting out of debt completely? Sound too good to be true? Well, it's not. It's totally legitimate and your lender has no problem with it. So what is it? Debt consolidation. When you consolidate your unsecured debt into a lower interest personal loan, you save a lot of money. And you do it in two ways. First, you pay less interest as you go, and second, you pay off the loan faster, which means you pay interest for less time. Best of all, you're paying your debts in full. So it's good for your credit score, good for your psyche, and good for your creditors. Debt consolidation is where you take out a new personal loan in order to pay off other unsecured debts. There are personal finance influencers that will tell you you can't pay off debt with debt. If you were just swapping one debt for another one that is essentially the same, that would be true. After all, debt is debt. But if you do debt consolidation the right way, it will lower your monthly payment, save you a lot of money on interest, and help you pay off the debt much faster. I know that sounds too good to be true, but it actually works. But again, you've got to do it the right way to get all those benefits. So what is the right way? First, get a lower interest rate. Your interest rate represents how much it costs for the privilege of owing someone else money, and you pay that interest as you go. So the sooner you can lower your interest rate, the more money you can save over the entire life of the loan, even if you have the same overall debt levels. None of us should spend a dime more than we need to on interest. Right now, the average credit card interest rate is 24%. If you're carrying a credit card balance from month to month, your interest rate could be higher than that. Some credit card agreements also say that if you miss a payment or are even late, they can move your interest rate up. The good news is right now, I've seen a lot of lenders lower their lowest interest rate. So now might be the best time to consider debt consolidation loans. If a lender will give you an interest rate that is 2 or 3 percentage points lower than the interest rate you're paying right now, you ought to take it. You don't get extra points for being loyal to a lender. Don't pay more than you need to. Debt consolidation speeds up the timeline for getting out of debt as well. This is because it locks in how much you pay every month. In the first few months, your debt consolidation loan payment will actually be lower than your minimum due payment on all your other credit cards. But credit cards have variable payments. So as you pay them down, your minimum due payment goes down as well. That's why it takes so long to pay off credit card debt, because your required monthly payment drops. But that's not true of debt consolidation loans. Your payment amount is locked in. So as you pay down your principal, more of your payment goes to pay the principal and less is going to pay the interest. That means a lot of debt consolidation loans accelerate your principal paydown as time goes on. Here's an extra cheat code though. Make extra principal payments in the first few months of having the debt consolidation loan. If you do, you will pay your debt off faster. If you are willing to tighten your belt for a few months, you can carve out another 4, 5, or 6 months off the length of your debt consolidation loan. So not only are you saving money on interest because your interest rate is lower, you're saving money on interest because you pay the loan off earlier. In other words, you're not in debt as long. You don't pay interest after you've paid off the loan. That's the kind of knowledge bomb you can expect from us here at the Yukon Project. One of the reasons we say debt consolidation loan is an easy button is because once you do it, you're on your way. You don't need to do it month after month. You don't need to make sure that your willpower is dialed in. Once you get the loan, you lock in your payment and pay less interest. Then all you've got to do is make your monthly payment, which is what you're doing right now anyway. What's even better, applying for a debt consolidation loan isn't hard or time consuming. Within 15 minutes, you can have a new loan and a cheaper plan. Once you use the proceeds of that loan to pay off the other debts, it's done. And several debt consolidation loan providers will actually pay off your other loans for you. Easy, right? If you visit our marketplace page at the Yukon Project, You can select debt or credit card consolidation for the purpose of your loan, how much you need, and your credit score range. When you apply to any one of our featured lenders, we will check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying will not hurt your credit score. We will show you all of your approved offers so you can pick the loan that's best for you. It's a great way to quickly answer the question, how can debt consolidation help me in my situation? Debt consolidation is definitely an easy button. Within 15 minutes, you set yourself on a path of debt payoff. Stop waiting for your debt to pay itself off, and stop paying lenders more interest than you need to. Put yourself on a path to debt-free life that you've always wanted. You can do it. If you found this information helpful, please like this video and subscribe to our channel. Your support helps us out, and we appreciate it. Thanks for watching.